And one of the rockiest stories this year, yeah, we're talking about gold. Well, the yellow metal neared a 3-week low earlier on today after the Bank of Japan disappointed some investors by not ramping up their stimulus program. So are we slowly seeing the cycle of easing come to a close? And what does that mean for the gold trade? Well, let's ask our next guest, Peter Schiff. He's the CEO of Euro-Pacific Capital. He's also one of our favorite guests here on Futures Now. So, Peter, once again, thank you for joining us. You know, you're one of the best-known bulls of gold around. Have you finally given up hope? And are you going to one day admit that maybe you were wrong?
Well, I think it's the people who have been bearish on gold. They're the ones that have to admit that they've been wrong. But, you know, I think we should talk about the bond market because I think that's very important. And I think what's happening in the bond market should be bothering stock market investors. You know, maybe it doesn't feel like a correction because it isn't over yet. It's just getting started. And, you know, all bear markets begin as corrections. So we don't know if this is a correction or the beginning of a new bear market. But if you look at what's happening in the bond market, bond yields on the 10-year hit a 14-month high today. We're about 2.25. If we go through 2.4, which we could do very shortly, we could be at 4% much quicker than anybody thinks. The economy, our phony economy, cannot handle interest rates at that level. The government can't afford to pay interest rates at that level. The banks can't afford it. Consumers can't afford it. Homeowners can't afford it. And so I think that what we're probably going to have to get from the Fed is more QE. They're going to have to print even more money and buy even more bonds to prevent this market from imploding. And that is extremely bullish for the price of gold.
Okay, I get the theory. I understand it in theory, but like in terms of what is actually happening in practice today, you've got a weakening dollar, you've got a weakening bond market. Why isn't it helping gold more?
Well, you know, it should be. I mean, you know, they say something about a gift horse, don't look it in the mouth.
Right.
You do have a lot of speculators who have been unwinding their speculative gold positions. Technically, there has been a lot of selling. The sentiment is very negative in the gold market, so people are selling the rallies. But that's how bottoms are made. You know, there is a lot of fear and skepticism out there. But when the gold market turns, it's going to be vicious. And I think it's going to rally even faster than it went down. But rather worrying about the top of the gold market, I don't think there's a top there, but there is a big top in the bond market. And this is the Achilles heel of the U.S. economy. And people were worried about tax hikes. Higher interest rates are much bigger tax hikes than what we were looking at when we were worried about the fiscal cliff or the sequester. This is big, and it's a tax hike on the U.S. government, not just on the American people, but on the U.S. government itself.
Absolutely. But, you know, Grizz, we were talking earlier, right, and you were saying that the things that used to work for gold just aren't working anymore.
Absolutely.
You stick by that? Yeah.
Yeah, totally. And Peter, you know, a couple of things I want to say. I mean, you know, you're an investor in gold. I'm a trader in gold. I've been bearish on gold since, you know, late fall of last year. I don't feel like a loser right now because it's $400 less than where it was at that point. And I'm looking at a bond yield that is higher in a year than it has been, and gold is still lower today. I'm looking at a dollar index that's 3 handles lower from its recent high, and gold is still lower on the day. So what do you think will be the catalyst to push this higher? And I don't see it happening this year at all, maybe in 2014. But is it going to be inflation? What is it going to be? Because the things that you're looking at, I'm looking at too, and gold is still going lower.
Well, look, it's not going a lot lower, but yes, it has been drifting lower. It's still not lower than it was 2 months ago. I mean, that big Monday where we were way down, we're still not lower than we were then.
But we do have a dollar index that's 3 handles lower than it was 2 months ago, and gold hasn't rallied at all in 2 months.
Yeah, although, you know, there are some currencies that have been weakening, but you're right, the euro and the Swiss franc have been strengthening, but it hasn't been a complete weak dollar environment. I think that environment is coming. But other central banks have tried to weaken their currencies. But look, we had a big move down. Gold is having to digest this. But remember, this bull market started over 10 years ago with gold below 300. So it's entitled to a correction, especially when you had a lot of hot money that chased into the market near the highs, or at least what's been the highs so far. What will be the catalyst? Will it be people waking up to the inflation fears that are out there? Maybe people will realize the Fed has no exit strategy, that it's all bluff, that there is no taper, because taper is impossible without collapsing the economy, the banks, or the U.S. government.
Just real quick, Peter. Just real quick, 10 seconds, 20 seconds. Give us some levels. How high do you think gold could go this year?
Well, I mean, I don't know. I mean, obviously, you can go back to the highs. We have 6 months left of the year. I mean, it can certainly make a move back up to 1800. But I think ultimately it's going a lot higher than that. It's not a question of, where it's going to go this year, but where it's going to go next year, the year after that. And when the world figures out the position that we're in, I mean, it's the gold that's going to the moon, not the stock market. Somebody was talking about the stock market going to the moon. It's more likely gold. I mean, the stock market's going to come back down to earth. The only thing that's going to make the stock market really go up is inflation, because it's not going to be economic growth. But inflation is much better for gold than it is for stocks.
Indeed it is, and gold's got a lot of catching up to do. So, Peter, we'll be watching. Thanks so much for joining us, Peter Schiff of Euro Pacific Capital.